Good morning or good afternoon, depending on where you're located, and welcome to our fourth annual Energy Storage Conference Storage Plus Everything panel. We thank you for joining us today. All attendees will be muted throughout the duration of this event. If you have any questions, we ask that you please submit them by clicking on the chat icon on the right side of your screen and typing in and submitting your question. Questions will be addressed by our panelists. And with that, at this time, it is my pleasure to introduce our moderator of this event, Bill Holmes, a partner at K&L Gates out of our Portland, Oregon office. Bill, please begin.
Thank you, Grant. Good morning or good afternoon, everyone, and thanks for joining us. Our topic today, or for the next hour, is going to be storage plus everything. And we've assembled a group of panelists that I'm really pleased to have with us this morning, folks that I've worked with for a number of years now, including from back in the days before energy storage was cool. Let me introduce our panelists. I'm just going to do a quick introduction and then let them tell you a little bit about themselves and their companies. The plan today is we'll introduce each of our panelists. They're then going to offer a bit of an opening statement, if you will, a presentation of their views on the topic, how they and their companies fit into the energy storage industry. And that'll, take about 10, 15 minutes or so. What we'd like to do with the rest of the panel the rest of the time today is encourage everyone to ask questions because we really do have a very expert panel in terms of their experience in the energy storage industry. And this is a great opportunity to quiz them about, everything you've always wanted to know about storage plus everything, or just storage generally for that matter. So please feel free to weigh in. There's a chat function that you'll see in the program, and we participants can see the people, or we can see the questions, and we'll work on organizing ourselves on our end to make sure that we have answers for you. Without further ado, let me introduce our panelists. And I think we've got, hopefully you've all got visuals on all of them. And I'll ask them to wave as I introduce them so that you know who they are, although you can probably see their names on your end of the screen. In any case, our first panelist will be Jeff Bishop. Jeff is the co-founder and CEO of Key Capture Energy. Next panelist is Jackie DeRosa. Jackie is Vice President of Battery Energy Storage Systems at Ameresco. She's also, as is Jeff, on the board of directors of the Energy Storage Association. Our next speaker then will be Audrey Fogarty, who is the Chief Operating Officer at Jupiter Power. And I've known Audrey for many years now, from probably the last decade or so. So you've definitely been in this business a long time. Let's go ahead and let's start with Jeff. Jeff, please give us your views, and this time don't be shy, okay?
Not a problem, Bill. So first and foremost, thank you for hosting this, obviously, K&L, and especially you, Bill. So 5 years ago, when I personally was new to the energy storage world, after 15 years of working in wind energy, I was at a Storage 101 panel that the Energy Storage Association had, and Jacqueline DeRosa was hosting it. And so obviously for me, this is special to be able to be on a panel with somebody who 5 years ago was literally teaching me everything I was learning at that point. And so really do appreciate this panel and the evolution of the storage industry. So 3 years ago, when I was on my first and only K&L Gates panel up until now, Key Capture Energy was a 3-person team with the expectation of growth. We clearly saw a very clear transition from thermal to renewables. And we knew that storage would be the one component that would hold everything together. Today, 3 years later, instead of being a 3-person team, we're now 44. We have 50 megawatts in operations and are the largest owner-operator both in New York and down in Texas. We have 204 megawatts currently under construction, and our execution plan over the next 3 years, we're looking about 1.2 gigs, through New York, Texas, and New England. For the purpose of this conversation on Storage Plus, there's a few basic points and a few basic frameworks that I think about. And obviously, with the other two panelists, we'll all have different views on this. But the first and foremost thing is that storage is hard. It's not said nearly enough, so let me be the one to say it. It's hard. There are weird, quirky, political, regulatory, technical issues that happen with storage projects, and you have to work through them. And the only way to be able to really do that is to get projects in operations. And so, for instance, like all energy storage projects have a limited duration, and when you're participating in wholesale markets, how does economic dispatch work when you want to withhold some of your duration for when you expect prices to be highest? But that may be in conflict with what the IMM wants within a given RTO and ISO. And whenever you combine that with adding the Storage Plus and doing it with other technologies, like the issues just compound and get incredibly complicated. The second point is we all do what we do partially because of and sometimes in spite of policy. Whether it's federal tax policy or state incentives, it's how we work. And so solar plus storage is the obvious one today, just because you can get the federal ITC whenever you have solar plus storage. But if a standalone storage ITC happens, which my company is very bullish on, it really opens up the entire gate as far as being able to do thermal plus storage, wind plus storage, et cetera. And then finally, all of our companies, developers, consultants, et cetera, we all approach this from very, very different angles based upon our viewpoints and how we see the markets evolving. And so my company, we like standalone storage projects, but we also do like the Storage Plus. And so our Storage Plus tends to be the wind plus storage, both onshore and offshore, as well as thermal plus storage. But everybody else is going to approach this from a very, very different viewpoint, and look forward to the conversation.
Thank you, Jeff. Before I turn it over to Jackie, just a reminder to everyone, please feel free to post your questions in chat. I do have some questions for the panelists, but we'd really love to hear from the audience so that we can have get a good conversation going here this morning. With that, let me turn it over to Jackie DeRosa. Jackie, over to you.
Hello, Bill. Thank you so much for the introduction, and thank you for and welcoming remarks. It's a pleasure to be here with you. We go way back, so I feel right at home on your panel. I've been on panels with you for many years, and it is pure fun. We like the large ice cubes in our drinks. So, and thank you to Jeff too for those kind remarks. It's nice to hear that somebody actually learned something from one of those webinars with, or it wasn't a webinar back then, an in-person training session with ESA, and go ESA. So Ameresco is an independent energy services provider, and we have been at the leading edge of new energy technology development, including state-of-the-art energy efficiency, solar PV, landfill gas to energy, the first of its kind renewable natural gas pipeline injection and treatment. And we're actually a pretty significant leader in the microgrid development arena. And you guys can probably hear some drilling in the background, so I apologize if it's disruptive. We are, our microgrids have utilized energy storage in very creative ways, and I'll mention that in a minute. But our business model, just as a general comment, is very flexible. We can own our assets, provide EPC services. We can do energy service performance contracting, and we like to operate and maintain our projects for the long term. So flip a project, we want to stay in it and operate it. The interesting thing that I love to talk about when it comes to Storage Plus is I'm really into this microgrid space right now. And that truly is storage plus. It's storage plus solar, it's storage plus gas, it's storage plus CHP. And the energy storage is the game changer in a microgrid solution. With advanced energy storage, now we can seamlessly island from the grid. We can isolate load. And do you guys hear that noise in the background? Is it okay? Anyway, with advanced...
You're good.
Okay, thank you. With advanced controller technologies, we can use this energy storage for the black start, the cold load pickup, voltage support, power quality, peak shaving, load following. And this is exactly what we're doing on some of our larger microgrid projects. And we're, really lifting that experience to apply that to, not just for the federal government, but for other solutions that are in the need of resiliency. And, importantly, on the storage plus as well, here in California, obviously resiliency is an everyday concern here with our public safety power shutoffs. And I see energy storage and Ameresco pursuing, a longer term solution where we can have hybrid resources at the substations with energy storage that can serve the load seamlessly island for PSPS events. And, during blue sky operations, operate in the wholesale and markets and serve as a resource adequacy resource. I think this is how you can make that business model cost effective. And we can use clean fuel for these types of hybrid resources. As I mentioned, Ameresco has some, large RNG development going on, especially here in California. So I'm all about storage plus. And when Bill asked me to be on this panel, I thought this is awesome. Back in the day when we wrote the, state of charge report for Massachusetts, one of the first studies, to evaluate the benefits versus the costs of energy storage to the ratepayers. Storage plus was, what we were really trying to articulate. And it certainly is cost effective. And, even back in the day when I was at my previous company at Customized Energy Solutions, I had clients that were already thinking about storage plus before it was cool, but the market design just didn't exist yet. And California has been very progressive on storage plus and creating new rules to dispatch, to interconnect. And obviously we're seeing that pattern throughout the country. But and I'm sure we'll be talking about that through the Q&A. But so I do relate to Jeff's introductory comments that the rules really need to be there for storage plus to work. So thanks again, Bill, and I'll turn it over to you.
Thank you, Jackie. Our next speaker will be Audrey Fogarty with Jupiter Power. And Audrey, let me turn it over to you then.
Thank you very much, Phil. Lovely to be here with you this morning or this afternoon, I guess. Also very nice to be on a panel with Jackie and Jeff, two definite stalwarts of the storage industry for sure. So Jupiter Power is an independent storage developer. We have a pipeline of storage developments in most ISOs throughout the country now, predominantly standalone storage projects. Our first projects are currently under construction in ERCOT and slated to come online over the next 1 to 2 months. For my own history in the sector, as Bill pointed out, I've been in the storage industry in the US for almost a decade now. Like Jeff, I came from renewables beginnings before that. I've been at a battery manufacturer, a storage systems integrator, and now a storage developer. So I feel like I've traversed the spectrum of the storage sector in a way. And it's been interesting to see the trajectory of storage combined with other business models over the last number of years, because I think Storage Plus has really been a part of that sector evolution. I remember early on, it was actually predominantly wind and storage that was driving a lot of the early storage installations, where you had particular project needs where storage was used to target the intermittency problems caused by an individual wind farm, for example, on a particularly weak grid. So it would deal with, ramp rate restrictions or fault ride through, that kind of thing. And then it moved to more standalone focus, where, we had And then I think in the last couple of years, we've kind of come back to storage plus again, predominantly driven by a shift to solar plus storage. And I think that's probably still the largest driver of energy storage megawatts that we're seeing, at least in interconnection queues. We're seeing standalone storage now gain more and more traction again, where storage developers are finding new opportunities to operate their assets as mainstream resources in energy and ancillary service markets, as ISOs really begin to open up to integrating storage into their grids. Obviously, the price decline in the equipment that has been happening over the last number of years has also contributed to the different types of storage business models that we're now seeing come to fruition. So, I think where we go from here, it's going to be very market specific. I think a lot of solar developers now at least consider storage, even if they don't plan for it right away. And they definitely have an eye to the potential to install it later on, and that can be part of the initial interconnection process. But I think generally the type of storage business model, whether it's standalone storage or storage plus something else, it's going to be impacted by regional mandates and policy drivers. I think it'll be very market specific. It'll be driven by revenue requirements such as off-taker requirements or contracting opportunities, and really whatever developers require to get their projects over the line. So I think we're in for an interesting few years to see exactly which type of business models come to the fore, and it's likely that depending on the market, we'll see different outcomes, I expect.
Okay, thank you, Audrey. Not seeing any questions coming up on chat yet, so I'm hoping we'll get a few of those for our panelists. But in the meantime, I wanted to just start with a question about a potential change in policy that we've all been, crossing our fingers and hoping for a number of years, and that is having an ITC available to energy storage directly. Solar plus storage has gotten to be, I won't say common, but certainly fairly popular, and it seems to be a growing segment of what developers are proposing to provide to their off-takers. And that is in significant measure, I think, due to the fact that you can use the solar ITC in connection with the deployment of energy storage. It's a little bit more difficult to do that with other technologies. And just what would you guys, kind of looking in the tea leaves, how would you expect a standalone energy storage tax credit to affect the market for storage plus? I mean, combinations with other different technologies, or does such a tax credit simply make standalone storage more of a viable option and makes the combinations less interesting? Jeff, what's your take? You're smiling, so I think that's probably, you're probably a good person to go to first.
Oh, no, I was smiling because I assumed any hard question you would just, push over to Jackie, and then, the rest of us would respond to what Jackie says. But overall, my thoughts on this is that a standalone storage ITC, grids need different things, and every RTO and every ISO is going to approach it from very different angles. And so one of the benefits of storage is that you can get closer into where the load centers are compared to a storage plus. And so that's where standalone storage, close to a major city, is a beneficial thing. In the storage plus environment, if you actually do level the playing field and allow for everybody to be able to participate as solar plus storage does, we're going to be seeing a lot more interesting combinations of thermal plus storage coming in, just because everybody's trying to figure out how to do the ESG movement from where the grid is today to where the grid needs to be 10 years from now. So a standalone storage ITC will just open up, different business models, and all of us are going to approach it in very, very different ways.
Jackie or Audrey, do you want to take a quick stab at that question?
Sure. Number one, the ITC is an exciting opportunity for energy storage, and it's needed. There needs to be a bridge because the market designs just don't work yet for energy storage. So I wholeheartedly agree that solar plus storage has been successful because of the ITC. And when I work on projects, I mean, certainly it pencils when you have an ITC that you can apply to energy storage. And that's just a fact. So, I mean, I think it's wonderful to have a standalone storage ITC that could potentially, make large standalone storage projects or small projects pencil. Whether it be, as Jeff alluded to, something that's closer to a location where the storage might be needed, or even if it's serving a system reliability challenge such as long duration storage, I think it would be fantastic. That being said, it's still very challenging to make a project with storage plus, work in a competitive, arena when you're competing with other resources. So I would advocate that the storage plus, whether it's storage plus gas, storage plus, whatever, should also have some type of incentive, because the benefits that hybrid resource is providing go far beyond just, participation in the market. We're reducing, GHG when we operate a gas plant more efficiently, for example. There's environmental benefits. There's a lot of benefits system benefits that are not visible and not, we're not able to monetize. So I definitely advocate for a credit for not just standalone storage, but storage plus.
Okay, thanks, Jackie. Audrey, do you have any views on this topic? And then I've got a chat question to take.
I mean, maybe just a few comments to add, Bill. I think the wider application of an ITC for storage or storage plus would obviously increase the pool of potential investors for all kinds of storage opportunities, which would definitely help to expand the market. I think it's worth noting, though, that there is a limited supply of tax equity, and the more you increase the demand for that tax equity, that will introduce its own challenges. And I think another point on this is that the tax equity framework that has traditionally been put in place, that's kind of used to certain kind of revenue formats like long-term PPAs, for example, which has kind of driven, let's say, the solar tax equity model. I think the way that storage plus or storage might operate is, not necessarily adhering to the existing frameworks that are out there. So again, I think that could, that could lead to just some other challenges around how tax equity participates in and supports storage development.
Okay, thanks, Audrey. I'm going to turn to one of the questions that we've gotten in the chat room. And Jackie, I think you've indicated that you're willing to field this one, so shields up. Please, could you talk a little bit about the global spread of storage and development? Are there any particular countries, regions, or manufacturers who are investing in this space? And then after Jackie weighs in, I'll give Jeff an opportunity to correct her. So,
I'm going to turn it to Jeff. So when I volunteered, I wasn't volunteering for that. Jeff, go right ahead.
It's all yours, Jackie.
I thought it was volunteering for the ITC one, so I'm really genuinely passing that one over.
Oh, okay. In that case, yeah, as far as the global spread of storage and development, as far as who's investing in the space. So it's fascinating for me where, like, whenever you were looking at the spread of wind or at the spread of solar, we were really depending upon German feed-in tariffs. We were depending upon Ontario feed-in tariffs. We were dependent upon New Jersey solar renewable energy credits in order to get the initial projects funded. The fascinating thing for me is on the storage side, instead of depending upon those very, very niche markets, it's already happening from a battery storage side. And so the cost curve on battery storage is declining very rapidly because the Chinese electric vehicles, European electric vehicles, California electric vehicles, it's already happening. And so really for us, it's not really, a question as far as incentives globally. It's really just a question of market access. And so certain, countries are going to approach it very differently. Like Ireland, for instance, they have 11 different ancillary services products, and that opens up a lot of competition for folks like me to be able to compete for those. So nobody's doing it particularly well, as far as I'm concerned, as far as market access goes. But we're all collectively learning. And so it will be a country by country, region by region, state by state, in order to really define what we can do for market access so that all of us can compete to provide the lowest prices for ratepayers.
Great, thank you, Jeff. And Audrey, do you any take from you on that topic?
No, I mean, I think it's interesting, just to observe that traditionally, like Jeff alluded to, I suppose, so much of the initial renewables development, for example, has come from Europe. But my observation is that the US has really kind of led the way in terms of storage, actually. I think if you look at the amount of solar plus storage that is in queues across the country now, it's phenomenal, frankly. And a lot of that, I think, has been driven by, obviously, the policies that we were just mentioning. But also, I think utilities are more and more inclined to look towards, say, in this case, solar plus storage or other things plus storage, as a way of possibly supplanting their dependence on thermal peaking capacity, for example. A lot of utilities now are including some type of storage in their integrated resource planning. Now, all of that has to come to fruition, of course, but I think it's still putting markers in the ground that there is a vision that storage is going to play a role in the electric grid going forward. And I just think that it's probably a lot more progressed over here than in other parts of the world at this point in time.
Thank you, Audrey. So another question, kind of coming back to the United States and picking up a little bit on the ITC we were talking about earlier. A question from Bill Mustin with regard to the storage ITC effort in the Senate. Is the push focused purely on ITC for standalone storage, or does it encompass ITC for storage in all storage plus whatever uses? And Jackie, let me throw this one to you first, because I think you brought up this concept in your prior comments is, should we have something that goes beyond just an ITC for standalone storage?
So it's my understanding that this is really oriented to date to standalone storage. And so my thoughts are, though, that it needs to be a broader recommendation and apply to storage plus. And if you're talking to the gas industry, it's gas plus. So just as we're also very storage oriented here. But I would say that the idea right now is standalone storage, and that I personally think that there's a lot of value for combinations of storage, and that all of these combinations really do need some incentive to make it work, because the storage piece is the piece that still is not valued in the marketplace yet. So that's my thoughts on that.
Okay, other panelists, any other take on that one?
Yeah, it's super complex in that, both Audrey and I, our companies are currently building an ERCOT where there are no incentives and there are no state support or federal support for our projects. But we do it because the right market signals are in place. And so it's always the fundamental question of are the right market signals there in the wholesale markets in order to allow for folks like us to, invest in millions of dollars for development with the expectation that there will be a market in the future? And if those market signals don't exist, but if it is a public policy need, how does that get incorporated? And so fundamentally, it's that issue that's playing out across all 50 states and across all RTOs and ISOs. And that's where the real struggle is of can it be done in the wholesale market? Do we have the same access? Is there the right price signals, et cetera? And if not, what federal or state incentives are there in order to get projects built?
One of the other questions that comes up, and this may be a little bit of a difference between where the energy storage industry is as compared to solar or wind. But some of the companies, and I think including Jeff, yours, and Audrey's, have trading teams assembled, which is something that I think wind came to later and solar came to later. What's Jeff? What's your take on that? What's the thinking that companies have when they look at the market? Do you need a trading desk in order to optimize, participate in the market effectively?
I would love to hear from Audrey first, and then I'll chime in.
No problem. No, it's a good question. I think from the very start, there has always been this, I guess this belief that storage needs to access multiple market streams, multiple revenue streams. The value stacking concept, and that's absolutely true. But that's no different to a conventional thermal plant, right? The thermal plant is earning money from the energy market, earning money from the ancillary services market, they're earning money from capacity market, but they don't call it value. They call it a tolling agreement, for example. So, I think there's not that big of a difference between how an energy storage unit might want to operate within these deregulated ISOs in making itself available for these different these different services, as conventional plants have been doing for a long time. Now, the key difference is that it's a little bit more complicated because of the duration limitation. And so, you have to make sure that you are, managing the commitments of the app way that you're in compliance with what the market design rules are, and that requires having people who really understand the market design. You have to be in compliance with what the technical restrictions on your asset are, and that requires people who will have both the kind of commercial and technical understanding to make those two pieces of the jigsaw fit together. And ultimately, at the end of the day, if storage wants to participate as I believe it should and can, as other resources in the market, we got to make sure that we've got the same capabilities as other types of generators in the market, for example. And I think that's really behind our our focus to make sure that we've got the right resources in place to really extract as much value as we can out of these types of assets.
Yeah,
I would,
Okay.
Oh, go ahead.
Oh, I was
Jackie,
just
thanks.
going to say, I completely agree that, these resources can and should be able to participate. You're right, that just like, conventional resources, they should be able to do the same things. But when it gets down into the weeds of the market design and how to make those rule changes, it's very complex. And that use limitation is a big deal because it comes into, dispatch rules, optimization rules, network modeling. And I know this is all what you're saying. The other piece is that even once you even get all those rules going and it all works, I think there's other advantages, of hybrid resources that still go unrecognized because you're ultimately reducing inefficiencies in the market. You're not starting up and shutting down resources as frequently. You're not bringing on as many to minimum load. You're really improving, the overall system benefits for the market by combining energy storage and improving efficiencies. So I think that's where my brain is that until all this stuff is recognized, that there should be some incentive, because right now you can't, for example, like at the California ISO, years back, they made a change to allow storage plus gas. They determined that the storage portion was adhered to the WECC rules, the reliability requirements, and enabled it to participate in the spinning reserve market for the whole resource. But when companies who could do that in California went to do that somewhere else, they couldn't, because they were like, hybrid resources? We don't do that yet. And now those changes are happening, and we're seeing market designs catch up. And California just went through a very progressive and lengthy stakeholder proceeding to model hybrid resources. And that's going to the board very soon. But anyway, my point being is it's very complicated, and I think there's a lot of other benefits that can be achieved that need to be recognized.
Totally
Okay.
get that.
Jeff?
Totally agree. Oh, I might be on mute. Oh, no, I'm not. So I find it super fascinating. Audrey is a former trader, and her team has a bunch of traders. My company, our chief commercial officer, she used to structure commercially natural gas plants. And then, we have 7 or 8 folks that all coded Python in order to be able to do the market participation, et cetera. And so as we add in the different elements between how do you actually participate in the markets, what's the intersection of regulatory, of commercial, of market optimization, it just adds in this whole layer of complexity that makes it super, super interesting. And so even, whenever we look at the solar plus environment, the solar plus storage, which, is in response to California, Arizona, Nevada, Hawaii, PPAs, RFPs, et cetera, it's all like having projects being defined as doing one thing. But in reality, these projects can do many, many things. And so as this continues to evolve from the solar plus or storage plus, whatever that may be, there's a whole host of opportunities out there. And yeah, as Jackie says, it's RTO by RTO, where if they do not have it correct as far as how these projects can participate as a combined entity, it's just not going to work.
Okay, thank you. And so let me just do a quick plug to the folks in the audience. Great opportunity to post additional questions in the chat room. The panelists are available for free for a limited time only. So between now and the top of the hour is your opportunity to pose some questions. One of the things I wanted to ask the panelists is, you look at the United States or look globally, as the case may be, and you're looking at markets. Do you see any market that is especially favorable for storage plus thermal or wind or solar or whatever? Where would you be placing your bets in pursuit of this technology or opportunities? Jeff, you want to take a run at that one?
Yeah. So it really just depends upon what your capital is and what your existing projects are. Like we are teaming up with a thermal IPP that has a coal plant that they're decommissioning, and on that project site, that project site still has value. It still has the interconnection. It still has local support. It still has everything around it, and so it becomes a question of, okay, can you take that and convert that to something else? And so we're teaming up with them to put a battery on at this point. And we're not public yet as far as which company, which RTO, et cetera. But like fundamentally, like that's like the type of opportunities that we all have to look at of what is out there today, what do the markets require, how are the markets evolving, and what fundamentally do we as battery suppliers, owners, operators, developers get paid for? And so there's going to be niche opportunities everywhere that everybody goes after. And it will be niche for another year or two, and then all bets are off once everybody gets compensated for the attributes they provide.
Audrey or Jackie, what are your views on that topic?
I guess
Yeah,
go
sorry,
ahead.
go ahead. Well, I was just going to say that I would very much be of the same mind with Jeff on that one. I think right now it's still very much kind of project specific. You find strategies that work for one. I think there are certain states for sure that are pushing or talking about putting targets or mandates in place. But again, those take time to get through the various regulatory processes and whatnot. If you look at what's driven solar and storage opportunities, for example, for the last number of years, a lot of it has been driven by utility requirements in certain states. I'm thinking of places like Arizona or Nevada. In the Northeast, Massachusetts has new requirements coming out that could potentially promote storage with wind, for example. There's a lot of offshore wind coming online there. So, I think there are some good kind of macro indicators in certain places, but I think in the near term, as Jeff was saying, you chase down the projects where you can see that there's a real opportunity to get something into construction, into operation, and be ready for the market as it continues to expand.
I would chime in that I think to get something into construction and operation, you need the rules. And I think California is doing a very good job in creating these rules. They were very early on. They said, "Oh my goodness, we need to do something to get storage in and storage plus in," and immediately they changed the interconnection process and made the material modification concept apply for storage plus. So one could use an existing site and combine it with storage through that process without having to go through an entirely new interconnection process. So that was advantageous. And clearly, through what's happening at FERC, the interconnection processes for storage plus will evolve to what we have here in California. And that's not to say what's in California is all the way there yet. I mean, there certainly needs to be change in terms of how we look at deliverability for combined resources. But I think storage plus in California, as I mentioned, the stakeholder process that just has been ongoing and looking at hybrid resources. Now that one's solely, I wouldn't say solely, but predominantly focused on variable energy resources. And really, how do you actually dispatch a solar plus storage resource in real time? There has to be, very intricate and specific rules to do that. So we have that, again, that went through a lot of back and forth and metering, telemetry, counting for capacity. All these things are, happening here in California and can be leveraged in other places. And they are being evaluated and contemplated in other places. And I think that you're right that storage plus wind is going to be another, big issue. We're going to see more of that, and probably, MISO, SPP. Those are, places where storage plus wind has already been for years, contemplated. But the rules need to be refined to allow for these things to happen. And then I would just comment because, Amoresco is very, active in the distributed resource space. And the processes again in California for storage plus solar, behind a retail meter, we have those processes. We have interconnection. We have, the grant processes that all the requirements are there. So I mean, always they're being tweaked and modified to improve. But and then on the distributed resource side for storage plus, say a microgrid, another avenue that we're pursuing. We have the microgrid proceeding that's looking at changing a lot of the rules for, crossing boundaries, interconnection. I mean, there's a lot to do. It's not there yet, but we're seeing a lot happen here. I think
Okay, thanks, Jackie. We've got another question that's come up in our chat program. What technology do you see coming down the line that you think will drive storage plus forward? So this is a technology question more than a policy question. And what do you think will be the catalyst that brings energy storage system market more mainstream? Who wants to take that one? Just start talking.
I like to hear myself talk. So I think that some of the new controller technologies for hybrid resources, I like this idea of being able to have a hybrid resource that can island from the grid and serve load, at a place where there's been a transmission outage that, is preventing service, from the substation to that, section of the load. And I think that the new software and new controller, capabilities in the microgrid space are going to enable, those resources to seamlessly island and then, come back online with a, cold load pickup and then be able to transfer and then, utilize the wholesale market for other market revenues. So I think the controller technology for microgrids has applicability to resources that can both island and then can also participate in the wholesale market.
Okay, thanks, Jackie. Jeff or Audrey, Jeff, let's turn to you first. Any thoughts on where the technology is headed?
Yeah, I totally agree with Jackie. The area that most people want to talk about is like what type of chemistries are coming out that would enable this. And the answer is that those chemistries already exist. And so it really just comes down to market rules and controls. And so it's software, it's controls at this point, and that will enable it. So it's really now get the market rules right, everything else will follow.
Audrey, any comments on that one?
Yeah, completely agree. I guess just maybe another take on it, just in terms of pure technology. I think anything which can potentially expand the potential duration of energy storage, that offers some expanded opportunities. For a long time, I think there has been talk about flow batteries, some zinc-based batteries, that would push into the 4-hour, 6-hour, 8-hour range. Obviously, you can use lithium-ion batteries for those durations as well. As Jeff says, the chemistry is already there. But I think, if we're looking at things like storage and wind, for example, the longer duration technologies that are available, probably the expanded set of opportunities for storage and wind, as an example. What really will drive it, though, is deployments. That's going to be the catalyst for for any new technology. And, in a market where there is not a huge amount of risks that is taken on new technologies, understandably, I think it's difficult for those technologies which are not, being deployed today and, very much becoming part of accepted grid technology, it's difficult for them to break through. So I don't know what the solution is for that to happen. But the more deployments, the greater success overall.
All right, we have another question coming in on the chat. For consuming entities that want to have 100% renewable energy or carbon-free energy supply, where renewable energy credits are used to document those commitments, are the measurement and REC accounting rules adequate for storage plus whatever to capture the renewable energy that first goes into the storage before becoming a supply source? And so, where are you counting the renewable energy credits? Is it the input to the storage system, or is it the output from the storage system after accounting for losses from attributable to round trip efficiency in the storage system? So has anybody had occasion to address the question in the context of storage?
I'll jump in first. So yeah, I've always struggled, since the commercial PPA, really got created, where, folks were saying they were buying RECs in order to offset, their consumption. And the answer is yes, you are. And, 10 years ago, that was like check the box and good. And it really did drive new, installations, new generation. And so, that made sense then. But as we evolve, everybody knows, like a data center that uses power 24/7, you need something different. And so that firmed block of renewable energy looks very different whenever you start to add in, wind that typically goes at night, solar typically goes during the day, potentially some hydro, maybe not with pondage, potentially some storage added in, in order to balance everything out, et cetera. And so I haven't seen anybody do it well, quite frankly, but it's something that, if I was on the board of any of these data center based companies or any of these like major tech players, what have you, I would be starting to require, just because that's how the world is moving. So I don't see anybody doing it particularly well right now as far as like how that structure works. And quite frankly, I have no idea how any of those contracts, any of those RFPs will work, just because they're going to be super complicated. But that's clearly where the market is going in the next 2, 3, 4, 5 years. And so that's, stuff me as a developer like that, I'm thinking about that a lot. And, we have business plans around that, but we have no idea how that market's going to evolve.
Yeah, Jackie, do you have thoughts?
Maybe a little bit more, out there kind of thoughts like I usually do. It's the same issue that you see like when they develop like the Clean Peak program in Massachusetts, or even like the SGIP in California. Like, everything has to be like, you basically have to charge from renewables to be counted as a renewable, right? But I guess the point I'm making is that even, right, like the SGIP, for example, they're very pronounced GHG requirements and reporting requirements. It's very complex. It took years to get to this point. But I think the thing that always sits in the back of my mind is that the more storage you have on the grid, right, even if it's not directly charging from a renewable resource, it's still improving efficiencies on the grid. So overall, you're still getting a benefit on the grid because you're doing things, in a better way, right? Like we talked about earlier about startups and shutdowns and minimum load. So I always, struggle to say, how do you convey that concept into whether it's renewable energy credits or, monitoring GHG or, these new programs that you're supposed to store from clean energy. So I know that's a bit out there and probably will never get addressed because we have so many other things to do first. But I just bring that added perspective.
And actually, if I could jump in response. So one thing NYSERDA does extremely well is whenever they, are doing their large-scale renewable solicitations, they're okay not having co-located wind plus storage but they're okay having it spread. We all have the same infrastructure. Like, we all have the same transmission lines. Getting new transmission lines built is really, really hard. And so oftentimes it makes a lot more sense in order to have load on the other side of a congested area during, the super peak generation hours for wind or solar, where you otherwise would have to curtail those projects. And so it's really going to be this evolution as states, as utilities, as everybody goes about this, of what does the grid actually need based upon what we currently have for transmission? And is it possible in order to do, non-co-located resources paired together? Or quite frankly, as Jackie said, as you get more storage, you enable more wind and solar just by default. Like, you have less, super efficient natural gas, trying to balance. And so what do states, what do entities, what do RTOs do in order to make sure that you enable anything like that and not require a, very, very defined, okay, here's a solar electron, here's a battery, et cetera. Instead, it's what does the grid actually need, and how do we migrate this to, a low carbon environment?
Yeah, and I think what we see typically in offtake arrangements, without getting too deeply into how do you account for the RECs, is that the offtaker, which these days is often a corporate buyer, although they deal less often with energy storage at this point, is whatever the renewable energy credits are, we get them, and then you sort out at some point in the future through Greenie or the regulators or whatever's controlling the accounting of RECs at that time. What the actual accounting is. But a really good question on that, and thanks for the discussion. Let me suggest that one last round of questions and thinking, because we're coming up on the top of the hour here. But you guys have had a lot of experience in the energy storage industry. So just take a look at the tea leaves and where are we going to be at 5 years from now? What's your best guess? And are we looking at systems that are more likely to be installed in front of the meter, perhaps grid scale systems, utility scale, or are we looking at more penetration behind the meter, or is it pretty much a wash between those two things? Where are you seeing things headed? Who wants to take that one first?
I'll go.
Jackie.
All right. So I definitely see more standalone storage, and I think we're already seeing these huge projects in California, and I think we'll start to see more of those throughout the country as we shut down gas resources and use energy. I definitely think we'll see more in front of the meter as the rules evolve. And I also want to, I think we'll see more longer duration storage coming on. I don't think you can solve all of the system requirements with, 4 hours. And we're already seeing procurements in long duration. So, which means that I think we'll see some new technologies. And I think that part's really cool, because that's why we all started in this space in the beginning, so that we can work with this new stuff. I definitely think we'll see some new long duration solutions. I also think at the distributed level, we'll see some changes. I don't know within 5 years they'll be as pronounced. I mean, we already have rules to allow for multiple use applications for distributed resources. It's a bit slower when you get in front of a retail meter. I mean, there's visibility issues into this distributed system. So it's a more challenging and more complex, I think, problem, which is really weird to say because the wholesale markets are about as complex as you can get. But I do think there will be more, more participation at the distributed level. I don't know that we'll, reach the point where the utilities are only going to be providing wires services within 5 years. But I think that the distributed space is going to evolve too. And again, grid space, I am seeing a certain evolution there as well. So I think we're going to see more capabilities with, the islanding from the grid, to alleviate resiliency challenges.
Okay, Jeff, any last thoughts?
I'm really bullish thermal plus storage. So I think we're going to be seeing a lot more nat gas plus storage projects that are out there in the market, both in the U.S. and in the developing world.
Thanks. And Audrey, this is your opportunity for a rebuttal.
That would be like me. No, I think front of the meter is really taking that reluctantly and then different depending on, because like I've been saying, different markets will have different drivers. I agree with Jeff that thermal plus storage is probably going to expand.
Oh, hey, Audrey, we're having a little bit of difficulty hearing you. You might want to drop the video.
Shoot, you know what? I hit my mute button by accident.
Okay. I thought it was the
last hurdle. We were into the last minute and my technology failed me. What a shame. Well, look, since we are
really good though. You looked really good.
I was so convinced what I was saying. I mean, to summarize, I think, yes, we are going to see front of the meter begin to, or continue to take off, across all spectrums, both standalone, solar, storage plus renewables, thermal plus storage, as Jeff said, and really it's going to be market specific. The impact of different federal policies, regional policies, market designs, and different ISOs, they will all determine, I think, what type of projects we see going forward. But the future is definitely looking bright, I think, that's for sure.
I want to thank everybody on the panel so much. I mean, it's great to get together with you guys, albeit only virtually. And fingers crossed, I hope that next year at this time we're all together in Washington D.C. in person. Back to normal. But in the meantime, thank you very much. Great to see all of you all again, and thank you so much for your contributions on the panel here this morning or this afternoon. With that, I'm going to turn it over to Grant for some closing remarks. Before I do that, just one real quick thing for those of you who are fans of energy storage. We do update our energy storage handbook periodically, usually right before this conference and right before the ESA conference. We've done that. So if you want the latest edition, which I think is version 6, you can go to our website and download that. And we also have a new law of hydrogen, or a hydrogen handbook out. And so for those of you who are looking for new long duration or very long duration storage technologies, you might want to take a look at that one. Okay, with that little plug in there, let me turn it over to Grant so he can wrap us up. Grant?
Thanks, Bill, and thanks a lot for moderating. Great job. And I just want to extend a big thanks to all of our esteemed panelists, Audrey, Jackie, and Jeffrey, for delivering such an informative and interesting presentation today. And thank you to everyone in our audience for joining. And with that, this concludes today's program. We hope you enjoyed. Have a great day, and you may now disconnect.